I'm here at the NASDAQ Market Site with Dr. Robert Hartwig. He is president and economist with the Insurance Information Institute in New York. First, tell us a bit about the Insurance Information Institute and its mission.
The Insurance Information Institute is a 50-year-old organization. It's a nonprofit trade association that represents the interests of the vast majority of the property casualty insurance and reinsurance industry operating in the United States and, in fact, on a global scale. And what we do is we make sure that the world, and by the world we mean broadly defined, we mean that policyholders, the industry itself, regulators, legislators, understand what insurance is and what it does for economies and communities all around the world.
Now let's start with a broader topic. The stock market has been fluctuating quite wildly of late. Can you help us make sense of these changes and what they mean to the insurance industry?
The stock market has been on a roller coaster ride, not just in the past few weeks, but actually for the past three and a half years, ever since the Lehman Brothers debacle and so forth. So we expect this volatility to continue, but what's behind it today, here at the tail end of 2011, is we are really riding the headlines. In other words, for the last several months, the markets have been upset over concerns related to Greek debt, sovereign debt around the rest of Europe, Italy, Spain, Ireland, and other countries, concern about the Eurozone perhaps even falling apart, and the impacts on banks and other financial institutions, not just in Europe, but around the world. You add to that the possibility, in fact, the likelihood of a recession across most of Europe, a slowdown in places like China, and clearly unsatisfactory slow growth here in the United States, and you got the makings for a real difficult time on Wall Street, and that's what we've seen as of late.
As you mentioned, volatile stock markets present challenges to the commercial insurance industry. What are the other key economic and political issues they face now?
One of the most critical factors that insurers, whether it's property casualty or life insurers, face, as do all other large institutional investors, is the challenge of very low interest rates. While the stock market may go up and down, interest rates have moved in one direction, down, and the Federal Reserve has told us they're going to stay down for another 2 years. Now, many people might wonder what happened to all those premium dollars when they come in the door before we pay out the claims. They're invested, and so insurers are now earning maybe a fifth of what they used to earn on that very same investment. And insurers are not risky investors. They do not venture out into junk bonds and these sorts of things. They are very conservative investors. So this impacts the ability to generate investment income and ultimately the price of insurance. On the political side of things, what we see, for example, is the implementation of Dodd-Frank here in the United States, the uncertainties associated with that, of course, the inability of Congress and the so-called super committee to reach any kind of agreement whatsoever. So those kinds of uncertainties with respect to the regulatory environment add to the volatility.
Now, we've also seen unprecedented catastrophe losses in 2011. Is frequency of large losses a major concern, and how is the industry coping?
Well, frequency of large losses is always a concern to the industry on a global scale. This will likely be the second most expensive year in global history, second to 2005 with Hurricane Katrina, in terms of global insured catastrophe losses. The largest event, of course, being the tsunami and earthquake in Japan back in March. But here in the United States alone, probably have somewhere in the vicinity of $25 billion of insured catastrophe losses, probably the fifth or sixth most expensive year in history. That being said, the industry went into 2011 better capitalized than at any time in its history and was financially well prepared to handle these losses and remains very strong today.
As we look ahead, where do you see the growth in this sector coming from in 2012 and beyond?
In 2012, we're hopefully looking at a bit of a pickup in the economy, which is likely to stimulate some employment growth, and that'll help commercial lines such as workers' compensation. We're also looking at a little strengthening in income and a lowering of the unemployment rate. That'll help personal lines, in other words, auto and home, but specifically auto insurance. And we're also looking at significant rate gains in the area of homeowners insurance. So while there aren't a lot of new homes being built in the United States, rates are rising in coastal areas and other catastrophe-prone areas. We're looking also in the commercial line side, in other words, the price of insurance charged for businesses, that is no longer falling. It fell between 2004 and 2011, almost continuously. That's beginning to move up, probably in the low to mid-single digits in 2012, maybe a bit more beyond that.
Okay, thank you so much, Dr. Hartwig.
My pleasure.
We look forward to having you again on World Risk and Insurance News.